may have escaped you, but then again, I may have assumed that I said something about it. A lot of the nuances you pick up over time on your own, which you've probably started to notice, some of them you forget potentially to put on your trade plan. Um, I will do that, uh, going through. I typically will notice something as I review some of my trade analysis sheets, usually the ones that are the screen grabs with some writing on it. I might notice something that I've done more than once, or an observation that I made that I realized that should have been put on my trade plan. So, um, is what documented? Oh, Linda picked up something that was discussed. It wasn't anything specific that she, that I'm, that may not, that is new or something. I don't even know what it was. What was it, Linda, that you picked up today on the speed tick? I don't even remember what we were talking about. Oh, the way if depending on whether it has the divergence or not, as to whether I will trade back into support or resistance. Yeah, I'll do that. And for those of you that are new to what we do, uh, bear with us. You will understand more about what we're talking about here in a few minutes. Yeah, see, so it was something that had escaped her, the fact that I will trade back into resistance if I have a divergent signal, but I will not without that divergent signal, with if it's just a speed tick trade. And the reason is I need that momentum to tell me that, or that divergence to tell me that momentum has shifted and is likely to be strong enough to push through that line. The way it dropped through it on the way down, it can push through it on the way back because momentum is headed in that direction. That's what divergence tells us. So for those of you that are new or visiting, it's very important to understand what these indicators are doing and why. When you understand that, then a rule like what I'm talking about here makes perfect sense. Okay? It's not a rule because it says when this dot is here and this line is here and this changes colors, trade. Okay? It's a rule that is built around not just empirical observation of a set of conditions. The empirical observation of the conditions doesn't generate a rule. That generates a series of tests. Okay, that's all that does. And then I run that series of tests to determine if we have enough, and a lot of data is collected to say if that confluence of events actually has an edge. Okay, so you won't necessarily. Now, Linda did included that on her trade plan because she knows and trusts that I've already done all the work on that. Um, that's not something I necessarily recommend people do because you will be a more comfortable, a more confident, um, a more conditioned trader if you do that work yourself. I know and I understand that people want to just use the work that I've done to trade with because it's faster and easier. And why reinvent the wheel? To some degree, I agree with that. For the most part, I would prefer you did the work because I know I'm a much better trader for having done that work. And I would like to see you do that work. This is the kind of stuff that we have in our mentoring program that I don't know, maybe if Praveen, if you have some time tomorrow. Is Praveen here? Did he leave already? If you have some time tomorrow, Praveen, you might run through the RX. Praveen's going to talk about the fast forward program because that's really the what's going to be more broad for every kind of a broad discussion of the fast forward program. But there may be some here. I know that we had some people interested in the mentoring program, the Trader RX program. And you might want to hit some high points on that tomorrow. It's up to you. If you don't have time, that's fine too. We can let Lisa and Connor handle that via emails. If anybody has questions about the mentoring program, feel free to call or email Connor or what's her name? Lisa. That's it. And they can get you up to speed. First, we got to check and make sure that we have space available. I think we do now, but we can only do a few at a time because it's very, very labor intensive. Okay, so everybody ready? Everybody got your pencils? I'm gonna go through some things um, relatively quickly, but this is different. This is not a webinar. This is a training event. If I leave you scratching your head, stop me, okay? I am not going to be covering up the chat. I will be taking questions, but I tell you what, they got to be on point, meaning that they've got to have something to do with what I'm talking about. If I'm talking about something specific and you go off on some weird tangent and I can tell you're not paying attention to what I'm talking about, you just have a general question, I'll probably ignore it. And then in which case you should probably just email it to Lisa or Connor and they can answer it for you. I will answer questions that are on point that have to do with what I'm talking about, okay? That's just in all fairness to everybody. We have a lot of people here. We've got a lot of new traders that are with us today that haven't been through a training session yet. We have a few visitors. We ended up having that event the other day where we were a guest speaker, and I screwed up and ran out of time. I thought it was an hour event, and it was only 45 minutes, and so I was just getting to the good stuff, and I had to end. So because of that, we invited a few people from that event to sit and listen to this, just if they were interested. And ideally, that if somebody was wanting to do a trade room trial, this is going to be way more interesting than a trade room trial. A lot more information. All right, so today you got just me, and some of you already got into bunt trading because you know some of this stuff. Some of you got into it for other reasons. Maybe you were referred to us. Maybe you liked a couple of indicators, ended up, I'm not sure why each person is involved in bunt trading. So I'm going to go through quickly. I'm not going to spend a whole lot of time on any one thing today unless you guys have a lot of questions. Absolutely. I agree. Unless you guys have a lot of questions, I will take as much time as we need, but I'm also going to go through some things relatively quickly, and if you don't stop me, I'm going to assume that you got it and it's time to move on, okay? This is being recorded, so if I leave you in the dust, you need to just watch it on video. Connor will be sending the video out, okay? So I'm going to talk about the logic of bunt, why bunt works, okay? It's not typical, breakout trading, trend trading, Fibonacci trading. It's none of that. It's not typical type of trading. Okay? We have something very specific that we are doing, and we're doing this very specific thing with indicators built to do this very specific thing. Okay? So we're going to talk about those two things. Then I'm going to pull out our handy dandy little draw package where I can set up scenarios of trade setups. Okay, and we're going to go over the speed flash. Also, the speed Mac is called. It's basically the same setup, and so I will go over different types of those setups. This will be a great place to ask questions. If you have questions or want to start thinking of some questions now, write them down relative to that particular setup. And Fred, uh, am I still projecting? People, everybody can see projecting. Fred, are you on a iPad or tablet or telephone? Yeah, you need to be on a computer, I'm afraid. A Mac or a PC. Back to the enter screen. Mike, are you on a tablet or phone? Yeah, for some reason, there's a lot of overhead involved in this sharing, screen sharing, and for this particular platform that we use, it's got a lot of really neat features in it for us, but it maybe not so good for the smaller stuff. Yeah, that might be it. You might also try a different browser, Mike. All right, so I'm going to go over the Rockstar, what's called the Rockstar. Now, it was given that name by a trade room member, and it just stuck because that really is a Rockstar. And then we're going to talk about different risk tolerance levels and how you need to go about defining your risk tolerance level. Okay, because you're going to build your trade plan around that risk tolerance level. All right, and then, okay, so day 2, tomorrow, which, by the way, you've gotten a couple of different mailings with probably 2 different times for tomorrow. That's our mail processor thing screwing up. It's supposed to be 12:15 tomorrow, not 4:30. 4:30 was today, 12:15 tomorrow. Everybody mark that down. The reminder email went out and it said 12:15, and that was correct. The previous email, my understanding is it went out, it said 4:30. That is not correct. Okay. So those of you that are VIPs, same time as VIP. Okay, but we're doing it here in this room, right? Praveen, Connor, we're doing it here in this room, in this, or are we doing it in the VIP room? Yes, this room. Okay, so VIPs, don't go to the other room. Don't go to your normal VIP rooms. Yeah, Lisa will send that up tonight. Third day, we're back to 4:30. Okay, which is correct. Everything else in the yeah, Henry. Everything else in the emails that you're getting is correct. It's tomorrow's time that is incorrect. So today 4:30, Thursday 4:30, Wednesday 12:15. So we're actually going to do our regular VIP aha moments, and then we'll go into, after that, Praveen's going to talk about our fast forward program and using NinjaTrader's Market Replay. If he has any time, he might hit on the mentoring program that we have. Okay. Day 3, we're going to start at 4:30. Connor and I are going to come on and talk about more trade setups and other ways that you could potentially use our indicators. Okay, so our indicators were intended to pick up pullback trades, and we trade those. But there are other ways that you could actually use these indicators very successfully. And then we're going to wrap it all up. We'll save the best for last and a big crescendo. Lisa's going to come in and show us Bloodhound and how we take all of the stuff that we're going to be learning about the indicators and the setups and how to apply it to an automated strategy, either to Bloodhound as to just generate a signal for you, whether you choose to trade manually, whether you're just using it for testing, or whether you want to send that signal from Bloodhound to another module inside Bloodhound called Raven, which will execute the orders for you. Okay, so Lisa's going to show us all of that on the end of the session on Thursday. Okay, so everybody's got this, and we're going to move on. All right. The logic of why this works. Okay, this isn't all just a bunch of random stuff where I just put together a bunch of indicators and hope for the best. Okay, there was some very strong intention here. The first thing I wanted to do was to figure out why certain things happen. Okay? Now, we all know that the majority of the liquidity in the markets these days are generated by the market makers. Okay? I'm not going to go into why. We've done other webinars. I'm not going to go into how they do this because there's lots of different ways. The market makers have been there for a very long time. However, they have not had the tools that they have now. All right? So the market makers have always done this, and they do it for a specific reason. They manipulate the markets to do it to create a reaction from us. Okay? That reaction is generally going to be some sort of an increase in stress. Okay? Whether that increase is a good stress or a bad stress, it's going to cause us to react to what they do. That's what they want us to do. They want us to react. So that's why they do what they do. So I started thinking, I need to figure out why they do what they do and when they do it. All right, so let's do a quick study here. So if you look at this chart, it may look like any other chart on any other day. Don't ask me what time frame it is. Don't ask me what type of chart it is. It doesn't freaking matter. It's a chart that is very typical. Okay? You look at any chart, you're going to see some semblance of this, right? This is what's happening when the smart money is manipulating the markets. Okay? So I'm going to go through this quickly. I do this all the time. Many of you have already seen this. So phases of smart money manipulations. First, they're going to do a period of accumulation. Then they're going to do a period of markup, a period of distribution, and then a markdown. Okay. Remember why I'm telling you this? I'm not telling you this. Most of you are already bunt traders. I'm not trying to sell you anything. I'm trying to remind you to think about what's happening rather than saying, oh, there's a dot on the screen. I need to think about trading this. If you understand why things happen, then you're going to have a much better edge than the person that you're trading against on the other side of your trade. We all know and understand, right, that trading is zero-sum endeavor. For every time you put on a buy order, there's somebody taking that order. They think the opposite you do. The better you understand what's going on, the higher the probabilities are that you're right, he's wrong. Okay? So, characteristics of accumulation. Accumulation is generally going to happen very slowly and stealthily. It takes place in what we call chop or congestion. Okay? Typically, it's going to be very low volume, which means that's probably when you're going to have the toothpicks in your eyes to try to stay awake because you're very, very bored or you're watching YouTube. Okay? We're going to be trading in a very tight range. So accumulation is going to look something like this. Okay? Price is just drifting around, not really doing much. Okay? So that's accumulation. That's the first phase of a market manipulation. Well, what's happening during accumulation? I should back up a little bit. Accumulation means the market makers on very low volume, in order to not tip their hands to those of us who are trying to figure out, well, what the heck these guys are doing, they're going to very slowly and stealthily buy up as many of the available assets as they can. They're going to corner the market, basically. When they have the market cornered, they now have control. They can manipulate the markets, okay? That's how they get to be market makers. They have an awful lot of money and an awful lot of computing power behind them to be able to do this. So the next phase is the markup phase, okay? We're going to see a series of higher lows and higher highs, prices rising on low volume. Of course, the opposite is true. They do it both directions, up and down. Okay. Price rises in stages with a series of retracements and pullbacks. So here's what a markup phase looks like. Okay, so they own all the available assets and suddenly they just stop selling. And what happens when when supply doesn't meet demand? Okay, there's no supply for the demand. What happens? Price goes up. All right. So they shut off the supply. They create a demand. They are creating a demand. Now, coincidentally, this is also typically when we get a speed tick. Okay. Characteristics of distribution. It's difficult to determine when it's happening because it looks an awful lot like accumulation. Again, another smoke screen, another way for them to keep us from knowing what's going on. It's usually very low volume, but it typically ends with an upthrust bar. This is very interesting. Now, it's really funny to me because I remember being one of the people that would go around beating my drum saying they're stop hunters and they're out there to take my money, and every time you see these big huge thrusts that the market makers could see my orders and they were taking my stops. I used to believe that for a very long time. And in fact, you can still read on forums where people believe it's just not fair that these market makers can see and do things that the rest of us can't do. Okay. Well, the fact of the matter is the market makers are making their money right here. This is where all their money is made. They accumulated here. They distributed here. Guess what? They did it slowly, quietly, steadily. They just keep taking our money and putting it in their bank. Very, very carefully, very quietly. Now we enter into the next phase, and that is where they now clamp down. They still, even though they've distributed they've made their money, they are still the majority owners of all of the available shares out there. They still have the power. So what do? They stop selling, and whammo, price goes way up. And generally it's going to end. You get these upthrust bars. Everybody sees these, right? You see these. We're sitting and watching in the trade room. How about big market makers duking it out? Well, we saw that today, didn't we, Mario? That is, in my experience, is generally not a planned thing, but occasionally they get in a loop and they do fight it out. And we don't, there's not really much we can do about that. So, but it doesn't happen often enough to where we have to design plans around it. Okay. So, how many of you have seen this price just chopping around and all of a sudden whammo? Well, this is what's happening. Now, they've made their money, but what they want to do is to create another reaction from us so that, and generally that's going to, well, that's where we'll see our speed tick indicators, which is a trigger for us. We're going to talk about that in a little bit. We now see the markdown phase. This is when supply rushes in and overwhelms demand. So what happens? They're pushing it up here, and then all of a sudden they've thrown all of the assets that they have at the market right up here when price gets up here. They do make money here, but they've made all their money, really serious money, back here. Now, they're throwing all their assets in, and they overwhelm the demand at this price up here. So remember, down here, they stop selling, so they create a demand, which raises price. Over here, they now want to drop demand. So they overwhelm demand with a whole bunch of contracts. Now, the funny thing is this is where everybody's bailing out, right? Anybody who was long might be taking profits, so that's going to overwhelm demand. People that were short are getting stopped out, so that's going to overwhelm demand. And they're throwing all their contracts back on the market. That's going to overwhelm demand, and down we go for the markdown, right? And why do they do that? So they can start the whole process over again. Doesn't that make sense? It's stupid easy how they're able to do this to us every day on every market, every instrument. Now, the beauty is what happens after these up thrusts or this climax bar is price pulls back and starts to channel. Price either pulls back or drops. The thing is they don't just do it. I'm showing it here where they accumulate, do a little bit more accumulation, then do a distribution. This is an oversimplified drawing. They could do this 3, 4, 5 times before they do this. They could do it once before they do this. We don't know, and they'll never tell us. So how can we take advantage of this? All right. We can take advantage of this by seeing all of these pullbacks inside of these manipulations. So, beauty. All we need to do is figure out when the manipulations are happening. Okay? Now that we've able to create indicators to identify these areas, we're reading what's going on inside the bars just prior to what typically happens afterwards. Okay? So we see this drop. I went back and I started measuring what happened here. What generated, what was inside this bar that caused this? Okay? This is what I'm looking for. This is what we trade. All right? Now, how do we do it? We're going to measure the flow so that we can anticipate that exhaustion, that pullback. That's how we do it. So how do we measure flow? We've got a number of indicators. Actually, I screwed up and put one of them on the next one, but that's all right. We have a number of indicators to help us measure flow. Flow is very important because without flow, we don't have any potential of exhaustion. Okay? So when price is channeling sideways, just moving sideways, we don't know which way it's likely to go next because prices it's just floating around out there. You know, the big boys probably know, but that's not a piece of information that's in the market that we're able to take advantage of. So as you can see, I like this picture because with the strong push, with the strong flow, little pieces of it are getting left behind to where if we can read flow very well, strong flow, we know exhaustion is imminent. We know that price can't, it just can't. It never has, and it never will continue to push in the same direction indefinitely, or even for a long period of time. It pushes, it pulls back, it pushes, it pulls back, it pushes, it pulls back. That's the way it works. That's the way all markets work all the time. Okay? So that's something we now know about the markets. We've got to use that to our advantage. So we've got an indicator. This speed tick indicator was really the beginning of the pullback. Or I started trading a different trade called an FT. We'll talk about that on Thursday. So that was the beginning of it. But the speed tick was the first time I actually tried to start measuring where I thought that the market makers were doing their thing. Okay. And so then I realized that there could be one or more market makers in play. Mario, this might answer your question. There might be one or more market makers at work. But then again, market makers aren't the only thing that move the market dramatically. If you've ever watched news or the oil inventory reports, you'll notice that news events or a market open will move the markets way beyond what market makers are typically going to do. So we have different levels of speed tick to tell us where our sweet spot is, when we're outside that sweet spot, but still in a pretty good range where we can expect that that it's not necessarily a news event that's causing this, whether it's a scheduled or unscheduled. And then we have the great big blue ones where as soon as I see this, I'm like, whoa, that's way outside my ability to understand what's happening right now and to be able to put on a trade with any expectation that there's not more push coming. Okay. So that's why we have various levels. Okay. And these change colors for those of you that are new, haven't loaded. We had a lot of people get involved with us over the last few days. So some of you haven't even licensed your indicators yet. So I'm assuming you haven't had the opportunity to see this yet. Many of you already have, and you already know about the different level. Another way that we're measuring flow is our pullback alert. We're measuring volume flow. There are entire trading systems built that will totally change the way you trade, totally change your chart, totally change everything in order to give you something that we've turned into something very, very simple. How come market makers coordinate to each others to manipulate the market? I have no knowledge that they do. I have no way to know whether they do that or not. But there are triggers in the markets they're not, most of the market makers are not sitting there pushing a button to generate orders. They've got very powerful, very sophisticated software and supercomputers that do this. So they already have triggers in place that say, when these conditions exist, let's start the manipulation. Let's start whatever it is. And what I showed you was only one way, but it's a very easy way for me to make a point and to show you what it is that we're working with. But they have many ways of doing it. And as far as them working together in tandem to create something, I would expect they probably do, but I don't know anything about that. And honestly, just knowing that they're there and that when I'm seeing this flow, that here's the thing, when I'm watching this flow and I see those upthrust bars that I showed you on the last chart, it is extremely unlikely that us retail traders, with the abilities that we have to place trades, could ever, as a group, place trades that fast. Okay? That's what we're measuring with speed tick, is the speed at which the orders are coming in. It's not a volume based, although there's often a lot of volume that comes with it. Speed tick is reading how fast the orders are coming in, and I'm reading that because I know about a threshold where retail traders are likely to be able to place orders versus the speed at which the orders are actually coming in, which tells me we did? Oh, I don't know why that happened. So we're looking at saying, oh, this is much faster than is likely that retail traders are likely able to trade. So that tells us there's a very good chance this is a manipulated bar, and we generally, not always, that would be very crystal ball-y, or predictive. We aren't predictive. We actually only tell you when conditions conducive to something happening exist. Okay? So I'm not ever predicting anything. I'm only looking at conditions that exist, and when those conditions exist, something specific usually happens. Okay? Not always, but more times than not. All right? So, to read exhaustion, this velocity should have actually been on the other slide. But we're reading flow using those other indicators and then anticipating exhaustion. So we want to see high flow and then these exhaustion indicators starting to kick in. Okay? Many of us already use an RSI or some other momentum oscillator to anticipate when price is overbought or oversold. Okay? So we have our OBOS indicator, and I'd love to tell you there was something very magical about what we're doing with this indicator. But all we're doing with this indicator, and this is huge, this is a huge part of what I do in my trading. This stupid little nothing but an outline changing color overbought, oversold indicator is a huge part of what we do. All right. And all we're doing is taking that oscillator that sits at the bottom of a screen, right? And it just goes along the whole bottom of your screen. And when it gets above a line, you're overbought. And when it gets below a line, it's oversold. And when it's channeling in between, it's total waste of screen space. So we took only the information we needed to know and we put it on the current bar. And that tells us that we're overbought or oversold and that price is likely exhausted. Okay, so we want to put it with a high flow rate and then exhaustion. Having divergence is also exhaustion. That tells us price is pushing one way, but momentum has already shifted the other direction. That's what divergence is. Divergence is probably one of my favorite indicators. It's probably one of the most telling things in the markets, and that is if you can read momentum, if you can read divergence. If you've taught yourself how to read divergence, you already know how strong it is. Most of us won't because you have to train yourself to see divergence. You can buy divergence indicators, but it's not much better than training yourself to see divergence. So I always heard about how great divergence was, but I struggled with it and ended up quit using it several times. I went back to study it and I thought, well, why do I need all this other stuff? Can't I just put an indicator on a bar that says, yes, a divergence exists now? Instead of teaching me to read divergence, why don't I just put it on there? Just make an indicator that says, hey, on the open of this bar, momentum has now shifted. Okay, we have price is maybe dropping, but momentum is actually increasing in the other direction. So that's already telling us that exhaustion has set in. And support and resistance is also an excellent way. When price comes down, slams into that line and stops and can't seem to cross that line, why is that? Price is exhausted. All right, so we have all of our flow. We want to read flow so we can anticipate exhaustion. When we have exhaustion, we have a pullback. Price pulls back a little bit and rests. That was generally, velocity was a tool that I created to help people understand something that is very obvious to some people by looking at a chart and was very not obvious for others. Velocity indicator was something I came up with that because we got a lot of people that that just are never going to be comfortable watching charts and thinking about that as people, okay, or as orders going through, and then trying to understand what it is that's actually happening inside the market. They're not going to do it. They just want to be traders and say, this indicator and this indicator are here, so that means I need to push the button now. Okay, so keeping that in mind, I thought, well, because I had a lot of people say, well, why didn't you trade that? And I said, well, we didn't have any velocity there. Well, how do you know that? So that's why I created velocity. Now, the different colors are just different levels of velocity, okay? So it's a medium to high to extra high level. As it turns out, and this was the initial version of it, and I just never changed it. We could just have one velocity bar, or you could just make them all the same color. And these were different threshold levels that I thought people might use in different ways. So it's just low, medium, and high. You can think of it that way. The green is going to be the highest. So they're in this order: light. The white ones are the lightest. Now you have the ability to change those colors inside the indicator, and it will tell you which threshold. So you can make them any colors you want, any transparency you want. But we've settled with the very lightest one is the lowest, then a little bit darker is medium, and then the green is the highest. And that's all inside your documentation, Dennis. You should have the documentation on that. So when we put all of this together, it's very much this is just a beautiful chart here. This is very much like what we see. Okay, so and there was something I left off of those slides too. The meter, the momentum, very, very important. And this was also developed to help people see and understand when momentum exists. We've got a lot of people who will ignore everything they see, but they see this, and they go, oh, with the speed tick, and they're like, oh, I'm going to trade that because I see dots and arrows, and they didn't look back here, okay? And I'll show you that on when we go to our little draw package, and I'll set it up for you. So they end up losing a trade because the flow, the very first thing you're supposed to be looking for, wasn't there, didn't exist. So that potential for exhaustion wasn't there. All you had was some other conditions that it's like you skip step 1, 2, and 3, you go to 4, 5, and 6 and go, okay, I'm going to enter this trade. Well, you should have never even considered that trade because steps 1, 2, and 3 didn't exist. So I created the Mo meter to help you understand when momentum exists and to qualify your trades. Okay, so again, that's nothing really. There's no real magic there. I've traded this system for a very long time without the Mo meter. As it turns out, it's actually a very handy tool, and people really like it a lot, and people use it for other things. So you see, you get this confluence of information and then a pullback. You know, we get some confluence of information here and then a pullback. This is a trade setup. This is a strong push up, overbought, slam into resistance. Got our speed tick here saying that it's very unlikely that retail traders could push this bar up like this. And then we have a divergence signal that suggests that momentum has shifted the other way. And it happens over and over and over again. Well, that's up to you to decide, Milby. For you, being new, I would say you need a lot. You start with a lot. You cannot be in a hurry to get good at this. So you start with, I'm going to show you in a few minutes an optimal speed flash setup. Optimal. Okay, so what that does is it reduces the number of opportunities you have to trade, but increases the amount of information from which you can take a setup. Am I breaking up to other people? All right. Yep. Sorry, Mike. Got to be you. All right. So before I go any further, hold on a second. Let me double check something. Yeah. This is where I want to go ahead before we go into this. It's got to be you. It's got to be you. All right. Hold on a second. I'm going to change over to a different screen. Oh, we're going to do this after we do the speed flash setup. So yeah, I know picture's gone because I'm switching. I do, Milby, and that's the last trade I suggest that you learn. I'm going to go over that on Thursday. It's called the FT. You've been in the room for a couple of weeks. You've probably seen me take a few FT trades or first touch trades. It was actually my first pullback that I started trading very successfully. But what happened is that I got really good at doing these FT setups. Can you hear me? You guys can still hear me, right? I got very good at trading, or at least I saw a lot of potential with these FT trade setups that I was taking. So I started doing more research. How can I get better information? What other information is the market giving me right now that will make these pullback trades even more powerful, even more or higher probability? What can I learn about the bar that came up and slammed into that line of support? I'm not going to do this now and ignore that. Okay. So right there, that would be an FT trade setup for me with no other indicators. But there's more information inside this bar. Something else is going on that can tell me more about what's going on inside this bar, that can give me better information from which to make a decision, okay? And that's what you need to learn first. Unless you're just in a hurry, in which case you may Connor, I actually looked for a video that I thought of that I'd like to show. You probably have it somewhere, but it's old. So Connor, many of you know, Connor's my son, and I took Connor to a place where we rented motorcycles and ATVs, and you go out and you tear it up out in the woods, and you just have a good old time. Okay, so Connor knew how to ride ATVs, the four wheelers, and he's out there just having fun on the four wheelers at a previous event. But this time he said, Dad, I want to ride a motorcycle. I said, you've never ridden a motorcycle. He goes, yeah, I know, but I want to. And I said, okay, we'll get you a motorcycle. And so for the first 30 minutes, he was learning how to shift. After about 31 minutes, he decided he was ready to jump over something. Okay? So what exactly did you break, Connor? I can't remember. Was it your foot or your arm or... Well, no. Yeah, that was awesome for having a good helmet because his face bounced off the handlebars. That's one of my most vivid memories is when he hit the ground, his face bounced off the handlebars until, thank God, the tree was there to stop it. Yeah, okay. So here's my point, and this is why I wanted to show this. You guys can do anything you want with this trading system that we have. You can jump in and decide, okay, I've been at this 31 minutes, I'm ready. I'm going to do what Tony does. But you're very likely to have the same result that Connor had because he decided he was ready. All right? I want to caution you, you might have a perfectly good experience, or you might smash your face into something. Okay? Keep that in mind while we go over this. I know many of you are in a hurry, but you can't hurry this up. It's like asking me, what golf club can I use to make sure I can drive it straight 300 yards? Well, you can use a lot of them, but you're not going to do it the first day. All right. So here's a little package that I use to create different trading scenarios. Now, this could be any chart, and we're going to talk about our Rockstar setup. Oh, by the way, this I don't know if is anybody confused about this. This is our OTS indicator which comes on for 15 seconds and then go away. This is our open target stop indicator. I actually had a version of this created by one of our traders to help make it easier to visually identify where your targets and stops are relative to the open of the current bar. Okay? Actually, if this were true, it would be right there. Okay? So the bar opens here. As soon as this bar opens, this prints to show us where our targets and stops are. Why do we find this? Why is this important? Well, because if we're trading back into support or resistance, we want to be able to visually see that without having to count ticks. Okay? So it's a nice, very nice visual reference. That's all it is. It's a free indicator. We don't even charge for it because all it is a nice, handy tool for people. So it comes. Anybody who's bought anything from us can get this for free. We don't just put it on our website and let people download it for free, but it's free to anybody that owns any of our stuff. We don't do anything with it, but it's a really, really, really handy tool, particularly today. Now, it didn't really help today too much because we ended up it ended up being a kind of a weird day. But on days like today, where a lot of things happen all at once and you have to make really fast decisions, this indicator is invaluable. Okay, so if you're selling, if a sell order is in order, and this is the open of the bar, your target would be here, your stop would be here. If you were buying, your target would be here, your stop would be here. Is that clear? Everybody understand that? I think we've gotten some support emails recently about that because we haven't really explained that very well. And if you haven't been in the trade room yet, which I think there's a number of you here that have just signed up recently that haven't made it to the trade room yet. You may not know about that. Okay, so when I'm qualifying a trade, what's the very first what's the very first thing I want to see before before anything strikes me as a potential trade setup? Somebody, what's the very first thing that that gets my attention? Well, I make him wear it all the time now. Momentum. So if I'm sitting and watching charts and this bar opens, am I thinking about trading? Am I looking to trade this? Probably not. Now, we take trades based on safety nets. All right. Most of you already know about this. Many of you don't know about safety nets yet. So I'm going to talk about our support and resistance. Let me back up a little bit. The very first thing I ever traded as far as pullback trades was bounces off of support and resistance, and that's it. What I noticed after studying for a very long time was quite the opposite of what I read other people saying. Okay? What other people were saying was the more price hits an area, the stronger that resistance is or support. My findings were quite the opposite. I studied this for a long time, and when price enters an area where it hasn't been for quite a long time, that is extremely strong. Okay? It's very unlikely that price is going to push beyond that support or resistance line without a bit of a pullback, without at least thinking about, noticing, recognizing, um, and um, and seeing that line. You want to know that people are seeing this line and are respecting it. Okay, so it's very common to see price come up, slam into that line, and then go sideways and drop. You need to look at this. You need to watch it. You need to notice. You can certainly take my word for it for right now, but I would expect that you would watch this back on video. Stop the video now. Go look. Go play back some charts. Go watch how. And for me, see this number here? This number says 120. This is in minutes. This is how long it's been. I'd have to move that down there. This is how long it's been since price has been in this area. 120 is my line. Okay, 120 or higher tells me it's been long enough for price to react to that line. But I'm going to watch and I'm going to confirm first. Because just because it's a line on my charts doesn't tell me anything other than pay attention. And let's see. See, I don't have any way to look at your and to see how you're trading or anybody else. But I can watch this and I can watch and see how price action is reacting to that line. And that tells me that other people are seeing and respecting that line. And if I know that, now I'm gonna place a trade. Now I have an edge. Okay. So if price goes across this line, and then the next bar opens up here. By the way, and this is a standing rule um, for what I do here on this little scenario designer thing. Don't pay any attention to the colors of the bars. I will probably put them in at the wrong order. Just use direction, okay? Uh, don't be too literal, or it'll drive you crazy. Just know that I'm putting in a bar that has whether it's up or down makes a difference. What color it is, it really doesn't matter. Okay, I can make them all the same color, and that might be easier next time. Okay, so I'm watching, and price busts through this line and then opens above this line. This line did not confirm to me to have any value whatsoever. For me, now, I no longer value this line as support or resistance for the next few minutes, for while I'm trading right here, because it did not confirm for me. Okay, that's what my confirmation is. You will often hear me say in the trade room, okay, price came up, hit the line, I'm going to wait for confirmation. And my confirmation period is the open of the next bar. Okay, so whether this hits at, with the countdown timer at 60, or whether it hits with the countdown timer at 5 seconds, my confirmation period and my decision is made on the open of the next bar relative to what this bar did. Okay, this is for every trade except the one I told you I'm not going to tell you about until Thursday, and that's the FT. That has a different set of rules. All right, have I lost anybody yet? Everybody clear? I'm really just trying to define the support and resistance lines. Now, I call these lines my safety nets. All right, and I will use these lines for support and resistance regardless of the fact whether it has 120 or not. But the 120 number becomes very important for the FT trade setup. Okay, now the higher the number, the better I like the line for any setup. Okay, which is something that very conservative traders, new traders, may want to take everything I'm saying and then add this 120 line to that to increase their chances of their trade working out. It will increase the chance of your trade working out and decrease the number of opportunities that you have. Okay? This number is the number of minutes it's been since price has touched this line. Okay? That's what this number means. Now, so what happens is this number, and what we used to do way long time ago, as soon as price came up, hit this line, this number would turn to 0. Well, if I wasn't looking at it at that exact moment, and I was looking at a different chart, and then suddenly I look over here and I go, oh, what was this line? I have no idea. It's now 0. So what we've done is this 120, when price comes up, boom, this number resets to 0 because obviously it's now been 0 minutes since its price has been here. But this 120 then moves over here. Okay, so it's just let us know if we're not looking at that exact moment, we can see it on the over here. So I'm only telling you about this line, these support and resistance lines, because they are my defensive position. There are a lot of us traders are only looking for ways to get into trades, which was me for many, many years. Now, I have factored into my trading. I don't just want to get into a trade that's likely to win. I want to get into a trade that's likely to win that's also less likely to lose. See, those are different things. Let me read these questions. Yes, and that is, oh shoot, where'd I go? And that is actually true, Mario. And that's why it's a first touch trade. Okay? The more times support and resistance gets hit, the weaker it gets. That, I believe, is true. You may have heard me say that. I think of it like a screen door. Fly keeps hitting the screen door until it finds a hole and out it goes. Okay? I kind of think of it that way. is there a tested probability of crossing the line with confluence even with FT? It could certainly be something you could test. But once it hits and crosses, I've kind of lost interest in it. I'm not going to trade back the other direction. It's telling me, remember what we're measuring. We're measuring flow and exhaustion. And it's telling me by blasting right through that line, exhaustion probably isn't setting in. So you may want to test that and find out the probability of that. But I would just draw a line in the sand there and say, I'm just not going to trade it if it just blasts across the line, even with a confluence of indicators. Okay, because there's a step-by-step approach for doing this. That's what I'm going to show you here in a minute. Yeah, that's what this number is. The number of minutes since price touched this line. The higher the number, the stronger the line. Is there any way to tell if it confirms, but I guess it breaches the resistance area? In other words, don't take that trade. There's no way to know anything for sure, but if price crosses that line during this period of time, we hit and then reaches the other side. That's called testing. Okay. If price then pulls back immediately, closes and opens below, you're good. If price ends up pushing beyond and then opens above, not me, man. I'm not taking that trade. Yeah, you're going to see you're more likely to have this line respected the steeper the approach to that line, which is which is how I trade the FT trades. And this is why I start here with these, with these, hold on a second. I'm a lot of control here. With these bars just kind of drifting along under the line like this. So it goes back to my original question. The very first thing that I'm looking for, it doesn't matter what time frame. We trade 1 minute. Okay, 1 minute if that helps. All right. So where was I? Yeah. All right. So just because price can be cruising along right up under this line that hasn't been touched yet, and then suddenly just go boink and hit that line, that doesn't have what's required to anticipate a strong pullback. Okay, momentum and all of those other things that I told you that read flow. We want a strong flow. So the very first thing to qualify a trade is strong flow. Can you look at this and quantify that as strong flow? What if I put a speed tick here and a flash here? Is that a good trade setup? Anybody? Is that a good trade setup? This is speed flash, speed tick flash. No, because it might very well work. In fact, I believe it probably is going to work because this works an unbelievable amount of time. But it's not a trade setup for me because there was no strong flow prior to these conditions existing. Not to mention there's no safety net behind the trade either. I won't enter a trade without that defensive position in place. I'm not looking just for trades. Now you can, trust me, you can. Milby, you over time, you may want to only trade offensively. Okay, so I know that your cumulative in terms of probability, meaning the more confluence, the higher probability to win. You're probably going to find that, but the more confluence you have, the fewer opportunities you're going to have to trade. So yes, the more confluence you have, the higher the probability, the the more conservative you're being as a trader. Yes, it's a much higher probability. But you've got to make sure it's not just a confluence of indicators, but it's of the conditions, okay? Confluence of conditions. And the potential for exhaustion must be there in order to expect price to pull back a little bit. Very first thing, all right? So where was I? We're talking about momentum. We're talking about the speed flash setup. Now, let's talk about what makes a good speed flash setup. We want to see, I can move this over here. You guys don't need a whole bunch of bars. We want to see a stronger push. Actually, let's get rid of this one. Up into that line with stronger momentum. Now, very first order of business. This is the first thing when I'm sitting there staring at charts. This is the first thing that happens. Yes, I would say that for most traders. If you've been trading our system for many months in practice, using fast forward for a couple hours a day, then I would say, you could, if you feel comfortable with it, decrease it to 2 bars. All right. It's all relative to your risk tolerance. Okay. And how much experience you have. All right, so it doesn't even get on my radar until I see a strong flow or push in a direction towards a major line of resistance or support, depending on whether I'm going up or down. Okay? Everybody understand that? Any questions about what I'm looking for to qualify a trade? This is step 1 of trade qualifying. Everybody understand that? Any questions about step 1? I'm looking for momentum, and this is what it looks like. Velocity, where price is changing a whole bunch inside of a bar. May not necessarily be a long bar. Typically it is. But you're going to have velocity, a lot of velocity or a lot of price changing inside of that bar. That's what's being measured. Strong potential for exhaustion begins to set in. Okay? What? Let me put this in the back. Oh, it went back too far. I'll just move this over. Pretend it's on this bar. Damn it. I can do this. All right. So there's more confluence suggesting a strong flow, and now potential for exhaustion is setting in. Now we've got a major line of resistance. We're going to watch this bar, and we're going to wait. During the life of this bar, you will see, hopefully, speed tick. That speed tick tells us a whole lot about what's going on. Entire trading systems are built to tell us the same information that speed tick tells us. And basically what it's telling us is that orders are moving faster than is likely to be able to be placed by retail traders. That is a huge piece of information because it suggests that that bar is being manipulated by the market makers. So you go, okay, it's manipulated by the market makers. One simple question. Why? Why? Anybody? Why are they manipulating this bar? We talked about it. Why? Crickets? Crickets? For the hell of it. Get a reaction. Thank you very much. And they get the same reaction over and over and over again. We do the same things all the time. We are very predictable. We're actually trainable. So we now have a potential speed tick setup. Price has come up, hit this line, pulled back, and is now opens right up under that line with a divergence signal. Those of us that are bunt traders already, that are just here for the training, but have been doing this for a while, we see this and we start going. You get so excited you can hardly stand it. This got a little lighter so it's easy to see. The open of that bar is where we're all throwing in trades as fast as we can because we have everything in place now for an optimal speed. We can actually throw in one more. Let's throw in the high of the day right here. For an optimal speed flash trade setup, okay, we have strong momentum, and it's not uncommon that it comes out of something like this, okay? And I showed you why. We know exactly why. We end up finding out or figuring out this is accumulation or distribution. Doesn't really matter, because it all happens exactly the way it's. You've seen this on charts, right? Everybody has looked at any charts and seen this, right? This isn't some vague scenario that I've just pretended happens, and then you come or you try to trade our system and you go, well, that never happens. So I'm sitting here forever and it doesn't happen. It happens all the time. It happens every day. At the open of this bar, you have a decision to make. That decision is made with information. Okay? You now have more information about what is likely to happen here than almost anybody else in the markets. You have an edge right here. Now, it is extremely likely price is going to pull back here. Now, how far? Beats me. It may pull back here and then take off again. Very likely. So we have a sweet spot, right? What typically happens is at least 5 ticks. Sometimes less, oftentimes much more. But we're looking for 5 ticks from the open of this bar when we place our order to target. Now, you go, well, what if I don't get filled? Well, tough. But also very good chance something like this will happen. When I say tough, I only say that because that's trading. There are no guarantees in trading. Sometimes you don't get fills, and that's the way it is. Not uncommon for something like this to happen. So the bar opened right here, right? And then it backs up. And there's a little bit more steam left and hits our resistance and stalls right there. Well, guess what? Instead of getting filled down here for a short, now you're getting filled up here for a short. Right? So you're getting a better fill, potentially. Oh, sometimes you're glad you didn't get filled? Yeah. Yeah, that's true. I have a real good, the way I trade, I scale in multiple contracts because I've been doing this a long time. I don't recommend anybody do this, okay? But I get a lot of fills. I fill very well because I know what I'm doing. I practiced and practiced and practiced, and I've been doing this for an awful lot of years, which is the short way of actually getting good at something. Right? You think you're going to find the quick answer. If I could just find the quick, high probability, easy answer, then that's all I need. Well, the quick, high probability answer is not the easy one that I'd love to give you, but in my experience, effort and experience are what make you good at this, just like anything else. Many of us believe that this is a very linear, this is very algorithmic process. The algorithms are simply things that we use to help us understand what people are thinking and feeling. But they don't tell us anything. There's nothing. We had somebody ask us about it. Which indicator is the most predictive? None of them. Nothing predictive. All we can do is say, here's a confluence of conditions that we can measure in real time that are happening right now. And based on experience and knowing how traders think and react to things, there's a really good chance something's going to happen right here. That's as close as we can get. Multiple entries and exits. Oh, it's I do teach that to people that have been all the way through our mentoring program. And that's because then I know what effort they put into trading. I know what effort they put into their practice, their learning. I know what they know, and I know what they're ready to do next. Beyond that, I wouldn't teach it to anybody else because that would be potentially very dangerous for somebody to try to do what I do. That's like that's the motorcycle analogy, right? The example of Connor bashing his face and then driving into a tree. He had no experience doing that. Should not have been doing that. It was a very dangerous thing for him to do. Now, are there people that can do it? Of course. Why? Lots of experience, lots of practice, and probably a few more marbles in their heads. So don't do it. Connor's got that daredevil gene that I never had that. I was never one of those. All right. So as far as getting a fill now, so here's the thing. You're like, oh, I couldn't get into that trade, or oh, it was too fast, or oh, I wasn't ready, or I missed it, or whatever. Then wait. And let's see. Where we go? Then wait. And trade it on the open of the next bar. You have that. That's actually a more conservative setup. You will miss a lot of trades. You'll miss a lot of trades because a lot of the setups happen inside this bar. But if price is still on the open of the next bar, weak, and is unable to cross this resistance, chances are it's still going to pull back before it takes off again. Not going to just go up one, stop, and then go again. I mean, it might. You can't know what the markets are going to do. There is no way to know what the markets are going to do. But the probability is that this, if price is hanging around and has been testing and just can't seem to cross here, eventually everybody that's trading here will see and understand that and go, I'm not pushing across there, and price will start to drop. All right, so this would be the next entry. This would be a more conservative, what I would call a more conservative entry on this speed flash setup. By the way, this is the exact same setup. Oops. Okay, grab that. Okay, same setup, just a different oscillator used using our divergence algorithm. This we call the McDiver. The other one we call the flash. All right, and it's very common we get them both on the same bar. This is a rock star, folks. This is the very first trade you need to practice. All right? Got a lot of you here today, and many of you have not started the Fast Forward program yet. Had a lot of people join up with us, take advantage of that special on Saturday and then some last week that haven't had the opportunity to start yet. This is the setup you're going to start with. Maybe with pivots indicator, the entry will be more clear. Do you have, this is the pivots indicator. You mean the NinjaTrader's pivots or our pivots? Because that's what these are. The FT reset, but there's pivots and some other lines in there, mid pivots and such. This is a pivot. that we use floor trader pivots. Why? Because that's what everybody else uses. What gives support and resistance value? Why are these lines important? Anybody? 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 Yeah, they can be respected, but why would anybody respect a line on your chart? Anybody? It's just a line. It's random. They're totally random based on some stupid formula that somebody came up with a long time ago. And everybody looks at them, everybody uses them, everybody puts them on a chart, so that gives them value because people think that they work. And therefore they do. Isn't that silly? But that's what it is. So we look at pivots because that's what everybody else is looking at. And there are people that use all kinds of different other support and resistance, and they work for different reasons, various and sundry reasons. But the most obvious and the ones that most people use, which is the one I'm most interested, are floor trader pivots. Which is funny because they don't even have many floor traders anymore. All right, so this is the basics. Now, there are many, many subtle nuances of anything that's worth learning, right? So you now have the basics of the Speed Flash Speed Mac trade setup. On Thursday, we're going to talk about the speed tick and the Rico dot and the FT reset. But having learned this, all of that other stuff we're going to teach you on Thursday is going to be simple. It's very simple. As long as you understand this concept right here, exactly what we're doing right here, those other ones are just fall right into place because they actually we're teaching them to you in reverse order that I developed them. All right. Any questions? I'm hoping you guys have some questions. Either that or I just did an awesome job. Now, inside the Fast Forward program and also inside the Quick Start Guide are videos on all of this. We do this a lot. We want to make absolutely sure we give everybody every reasonable chance to be successful at their trading. And one of the most important things that that we have for you here is honesty. And the honesty is this is not going to be easy. You are not going to find an algorithmic way to predict price. It's not out there. I promise you. I looked for 7 years. You can collect information, and that information, that confluence of information, can give you a very high probability of being right, or of knowing when price is likely to do something. It gives you a lot of very good information from which to make a trade decision based on your personal risk tolerance levels. That was a beautiful segue, wasn't it? That was one of my best segues ever. Yeah, it would have been better if I could have segued really nice and easy into that slide being up, but at least the audible segue was good. Risk tolerance levels. there are very few trading systems out there that I ever found that gives you the ability to trade inside that trading system exactly the way you need to trade or want to trade. Okay? You can be very defensive, you can be very aggressive, you can be very conservative, you can trade this system however you feel comfortable and confident. Those of you that are here that are from our trade room can attest to the fact, and if you haven't had a chance to be in our trade room yet, um, uh, you could watch our Week in the Trade Room video, or when you finally come into the trade room, whenever you're ready, you will notice that all of our traders post their wins and losses, right? Everybody does that, which is also uncommon for trade rooms in my experience. Mostly it's just a bunch of people posting winners, especially the moderator. We don't do it that way. We're an actual trade room where we trade we all post our wins and losses in there. Not all traders trade all trade setups, right? Those of you that are in the room, we'll have some traders that boom, 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 that trade. It seems like they're trading every 5 minutes. Boom, 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 and posting their trade. We have some traders that sit quietly and never post anything in the room ever. We don't know if they're actually alive. We don't know. We don't know what they're doing. We have people that have been logging into the trade room for years. They never type anything in the chat. We don't know what they're doing, but they keep coming back. So maybe they're trading. I don't know. And then we have some people who will post very occasionally because their risk tolerance levels are not the kind that where they want to trade a lot. They just want to trade 1 or 2 trades a session or 1 or 2 trades a day or whatever, make a few bucks and move on. Okay, which is all fine. You need to decide why you're trading and what you're trading for. And then understand how to go about getting there. All right. Now, just because you have or have developed or have identified that you have a particular risk tolerance doesn't mean that you stay there. Your risk or risk tolerance is determined by your level of comfort of uh, uh, your understanding and ability to trade our trading system. Okay, so very simply, this and I'm going to go through this kind of quickly. This is also one of our fast forward. This is from a video in our fast forward program. So I just kind of grabbed some of it so that we could talk about it. But you can go into the fast forward. For those of you that are VIPs, just go and you'll see this listed in the videos. You can go from a very low risk to to very high risk, and we would characterize some of this as on the far left being very conservative, on the far right being very aggressive, and then all these areas in between. You can still trade our system and trade any one of these. Okay, you just have to know the flip side of what of being either a conservative or a high risk trader or somewhere in between. So what you're going to find is, on the as a conservative trader, you're going to have fewer opportunities. That's what I was trying to express to Milby, is that you'll have fewer opportunities if you're looking for more and more confluence, but your risk levels certainly are lower. So you'll have lower potential rewards to be more conservative, higher potential rewards to be high risk, lower drawdown potential to be conservative, higher drawdown potential for higher risk, lower anxiety about losing. You can just sit quietly and patiently. High risk, the more you're in a trade, the more often you trade, you're probably a very high anxiety type personality anyway. However, what I ended up being and noticing was that my anxiety and stress as a conservative trader a long time ago was that I would be watching the charts move, thinking about, well, all these other people are trading. Why am I just sitting here? Why? And that would cause me a lot of stress, a lot of anxiety about missing out on all that stuff that's going on the charts because I'm being very conservative. Being very high risk, you don't have all that anxiety. You're in and out so much that you don't even know when you're in or out sometimes. Neither of them are a guarantee of success. Okay? So you've got to find uh, your own level. Seems like I did this already. All right. So you're either crazy, Connor, jumping your motorcycle into a tree, or you're a nervous Nelly afraid to get out of the car when you get to the ATV place. All right? Or perhaps somewhere in between. Most common areas are going to be, I would say personally, I'm in this area right in here. We have many traders that prefer to be right in here. The reason I'm right in here, it has to do with experience and what I told you about earlier. I trade multiples and I scale. So I'm not looking for a lot of opportunities. I don't need a lot of trading. I'm just looking for the better opportunities. So, and I do that by having grown my skill, having grown my confidence, thus having grown my trading and adding a contract a little over time. To where I got to a point where I was able to add enough contracts to where my fills became an issue, in which case I started scaling. Okay, so, and that was all time. That was all based on time. But generally, that with my trade setup selection, I'm in this area. You may be in more of a hurry, but you don't have the account to trade uh, like I do. So you may decide a little bit higher risk is right for you, or it fits your personality type. But know and understand that you will take more losses. You'll have more winners. You will have a bigger swing in your account size. You will have less consistency that way. So you have to also accept the higher risk um, characteristics, the things that are likely to happen if you're higher risk. Okay. Yeah, exactly. That's a good point. And I would really hope that I'm in here somewhat more leaning towards conservative. That new traders are not necessarily over here, but somewhere over here, and think of what I do as too risky for them. It should be, because you have no experience on that motorcycle, Connor. You need to be careful. You need to learn. You need to start moving in this direction as you get more confident, as you get more experience, as you get more more equipment covering your body when you crash into that tree. All right. So you need to, by doing this, you're going to need to increase your confidence. How are you going to do that? How are you going to increase your confidence? You're going to watch. You're gonna see what successful people are doing and ask questions. Um, we're all about answering questions in the trade room. Anybody wants to ask, man, we got nothing else to do. We're just sitting and waiting on the bus to show up. So ask away. Um, you watch the conditions in the markets. You watch the price action just before, during, and after a setup. This is how you're increasing your confidence. Okay. You look at other indicators to see how well they did or didn't support an entry and exit. You start watching um, other markets for other signs you missed. So you increase your confidence. Okay. I use this a lot, and maybe some of you haven't heard it because you're new with us. Driving a car. Now let's back this up and let's use driving a car. And they teach you this when driving a car. They teach you the most conservative way of driving a car, but over time, with experience, with watching traffic, with knowing and understanding that when somebody doesn't look at you first before they pull out into the street, chances are they're going to pull out into the street right in front of you. You learn these things over time. You don't know that and just expect that they're going to do it because they're supposed to, right? We learn these things over time. And over time, we become very confident drivers to the point where we can drive and put on makeup, well, Connor can, and drink a coffee and eat a sandwich and get directions from our phone and do all of that and still navigate from point A to point B without actually even thinking about how we got there. And generally do it very safely because we're practiced at it. Okay, so same type of thing. Watch the daily trade room videos. Watch the setups. You don't have to sit through every tick like you do in the trade room. Scroll through the boring parts, go to the important parts, and watch and look at what the other instruments are doing. Listen to what the moderator is saying. Okay? You want to gain confidence in your system. How do you do that? You practice. Sim trading during live trading days. By the way, if any of you trade with real money before you are completely confident that you know and understand your risk tolerance, you know what the indicators do, you understand what the markets are telling you when you're reading these indicators, and that you're very confident that you know how and when to place a trade and how to manage that trade. If you ever trade live money without all of that, you deserve what you get. If you're expecting that the indicators are going to do the work for you, you deserve what you get. If you don't understand that the indicators are only giving you information from which you are responsible, you are accountable for making that decision. If you're letting the indicators do it for you, you deserve what you get. Okay? Don't trade with real money until you're confident, period. How do you do that? You practice. The Fast Forward program was designed for you. Okay? Most people don't have the first clue how to practice their trading. Oh, yeah. I worked at my trading for 7 years when I was struggling, right? Everybody knows this story. I was working at my trading. You know what I was doing? I was reading forums, downloading free indicators, throwing them on charts, scrolling around on charts, drawing pictures, and that was working at my trading. So you can use the simulated data feed for trading, for practicing your trading. That's kind of fun, because then you always win. You're going to analyze and study your I call it I wrote trade log here, but it's actually more like a trade diary. You're going to analyze and study your trade plan on a regular basis. Linda actually made a good comment. She's had a trade plan for a while, but a trade plan is not a static document. A trade plan is a fluid document. It is something that you change regularly as things change with you. You can't write a trade plan and put it up on a shelf and forget about it. Okay? We talk about all of this in our AHA sessions, VIPs. So you guys that are new VIPs, don't feel like you're going to miss any of this, because you're going to hear this many more than one time. That's how we learn. Okay? So you're going to analyze what other markets are doing during that period of time. You're going to analyze what missed trading opportunities. Those are just as important as the ones you took. So your trade entry and exit, everything you do in trading is executing your trade plan. Period. That's all there is to it. How you feel about something doesn't matter. So a very successful trading day, you may have lost money. That's a hard thing to get your brain around at first. But over time, and again, this is all stuff we talk about in our AHA session. Over time, you'll get it. You'll understand. I had a very successful trading day today in the trade room, and I got taken to the cleaner. I got smacked around by the markets, but I was perfectly successful today because I executed my trade plan, except for once when I missed a trade. I don't know how I missed it, but I missed it. Everybody else got it, and of course it was a winner. Make sure that you have designed your trade. I showed you a more conservative trade entry for the speed flash. There are lots of ways to make, and this is how you trade within our Bunt trading system that you will figure out over time. You'll learn this over time. There are lots of ways to trade this system by adding or subtracting certain confluences, or even some of your own things that you like to use. Okay. Just make sure that you're within your risk tolerance, and you find that risk tolerance, and you can adjust the trade setups to that risk tolerance. And we'll talk about that also in the AHAs. All this is in the AHAs, and some of them are in many times. And you practice, and you study, and you watch videos. Guess what? What else do we get good at in life when there's something that's important to us and we want to become really good at it? What else would we want to get good at that we would do these things for? Everything. So why is it that so many traders believe it's not really necessary in trading? It is for everything else, but not trading. Why? I know why, because it looks so freaking easy. And it's all about numbers. And we believe that trading is a science because because there's numbers involved. Numbers only tell us how to understand what people are thinking. That's it. You get your brain around that whole thing, you might actually have a shot at this. All right. Any questions? I think that's the last slide. Yep. Any questions? We went over a lot. It is more of an art. That's what I just said. It is not a science. Too many people think it's a science. The art is understanding human nature and being able to, and we all have that ability, right? We all have the ability to understand people's thoughts, feelings, and emotions. Guys, married guys, you ever walked into a room and you know you're in trouble and nobody has said a word, but you know, uh-oh, right? So we all have the ability in person to understand, to be able to relate to people, to understand thoughts, feelings, and emotions. Now all we've got to do is figure out how to do that on a bigger scale via the computer. Think about the trading pits back in the day when they were trading pits. I think there's still some, right? These guys traded against each other every day. They know each other. They go to lunch together. They know their strengths and weaknesses, but they're trading against each other every day. They had a huge advantage that doesn't seem like we have, but we do. We just got to know how to use the tools that are available. All right. How's that? All right. Tomorrow, don't forget, tomorrow, right here, 12:15, we're going to start. We're going to do, we're going to invite those of you that are just visiting. We have a few of you. Actually, we have a lot of you. And our new VIPs. Everybody's coming to see our next VIP. I don't even know what it is. We have these VIP AHA sessions every Wednesday, and we have about 30 some odd of them that we just continually do over and over and over again. So you hear the same thing twice in a month, but I mean twice in a year. But I don't have any kind of a script I go by. I have just slides with bullet points basically. And so each time I do an AHA session, it's different. It's going to be different. I'm going to try to come from a different angle. I'm going to try to make you understand things differently. And you may hear something 5 or 10 times before it finally hits you. Boom. Oh, now I get it. And that's how people learn. Okay. That's why it's designed this way. I could do a series of videos. I could write a book and I could just send it out there. But you know what you're going to do? You're going to watch all the videos and you're going to read the whole book and you're going to pick up the high points that you're interested in and you're going to forget about the rest. Because at that point in time, they may not have been important to you or didn't make any sense to you. So we don't do it that way. Conventional wisdom, that's the one we're doing. Yep. All right. Well, thanks for coming, everybody. We will see you tomorrow. And if you end up thinking of questions tonight, email them to us and we'll see if we can answer them for you tomorrow. If you've got any questions, if you're just visiting and you've got questions, we still have a special going on. I think we have a few people visiting that are considering that. Yeah, there's the page the specials on. If you've got any questions, just send Lisa or Connor an email. Expires tomorrow. Tomorrow night. All right. Okay. All right. Thanks for coming, everybody. We'll see you soon.